Much of the focus was on the dollar, which is now falling back a bit after climbing sharply. In fact, the greenback is headed for a fifth weekly decline. Sarah Eisen looks at the trend and what some top strategists say could happen next.
From earnings to economies, the dollar's moves are making waves. After a massive run-up, the dollar has now plunged to a 4-month low. Overnight, we surged past 114 euro, getting whacked lately on weak U.S. economic data, most recently disappointing retail sales. But the bulls are hanging in there. Strategists see 102 for euro dollar by the end of the year. Great news if you're holding out for that European vacation.
The dollar had been depressed for so long purposely by the federal government that tried to lower the value of the dollar in order to compete on the global stage. But its move was very dramatic and had a significant impact on particularly the S&P 500 companies.
Strategists see a strong dollar against the Japanese yen, too. On average, they expect it to run up to 124 by the end of 2015 and get even stronger next year. That doesn't mean it's going to be a smooth ride. Most of the respondents expect current heightened volatility to continue for currencies, and 30% even say those wild swings will get worse. But when it comes to the dollar, which has been at the center of trading action lately, don't count it out just yet.
Its huge rally back that we saw in the last few months has reawakened the idea of how important it is, particularly to the multinational companies that do over 50% of the business outside the United States. That's why you're hearing so much about it.
Ultimately, the Federal Reserve is preparing to raise interest rates. That is bullish for the U.S. dollar. In the short term here, this dollar correction may prove helpful for multinational companies like IBM, Apple, and McDonald's, who do a lot of business overseas. But in the longer term, strategists say they're going to have to get used to a stronger U.S. dollar. For Nightly Business Report, I'm Sarah Eisen.